Good morning, everybody. I hope you guys are all having an absolutely phenomenal, what are we on, Tuesday this morning? I see you guys, good morning. I will know, if you are ready, I would love to see your beautiful faces. But thank you guys for being on today. We're gonna go into the weekly market update, but I'm gonna have a question for you guys that I want you to think on as we go through our call today. And it's, we're getting ready to kind of plan out what July is gonna look like from a schedule perspective, right? And I know we've gone through shifts, so I'm gonna have a question for you guys on, we've got these two awesome books right here, and I would like to go through one of them in July, and I'd love to know what preference you guys have, right? On which one we kind of cover a little bit more in depth. We would do that on one of our weekly morning calls. So we've got the Millionaire Real Estate Agent, right? The Bible right here of real estate. And then we've got the Millionaire Real Estate Investor. And part of the reason that I wanted to potentially look at that is it's something that we've, oh, I saw already in the comments, investor real quick. Thank you, Shelly. But yeah, I wanna know, you know, what that preference is, because each of those is gonna serve a different purpose, right? If we remember, the Millionaire Real Estate Agent, when it was written, was a book where they took about all these, Gary basically went out and did the research, and he found, you know, who were the real estate agents that were out there that were making $1 million in their business, right? That were making $1 million in their business. And he found that there was 4 models that those agents had in place to make $1 million in their business. First is the financial or the economic model, right? How many transactions does someone need to sell in order to make the amount of income that they want to make? That actually in Command, that's your goal setting feature, right? That's the goal setting feature. It actually builds out your economic model for you. The lead generation model, which I'm going to come back to in a second, the budget model, right? The budget model. So if you're running a business at different levels of the business, what percentage of your income goes to cost of sales? What percentage goes to business expenses? And what percentage of that is profit? And as we know from the book, you know, as you grow a bigger business, right, there's more business expenses that come into place, but that sweet spot is that 40% or more should be profit, right? And there's a lot that kind of comes around that and what the expenses are. And then you have your organizational model, which is how do we build an organization that, should we choose to step out of real estate in the future, that 1, our business is still profitable and can still run without us, and 2, that we continue making money, and you could even have the potential to sell it at some point. So those are the 4 models of the Millionaire Real Estate Agent. And I said I would come back to the lead generation model. You guys hear me talk about that all the time, right? Is how do we really know if we have a business? Well, we know if the systematic way that we communicate to our database provides us with a guaranteed amount of income, right? A sustainable, a predictable amount of income through different activities that we do. So that's where things like the 36 touch come into place, right? It was the 33 touch in the Millionaire Real Estate Agent 1, and yet we're using a lot of the models already, and our systems are based off of the Millionaire Real Estate Agent 2, which is currently still being written, right? That's currently still being written. But the reason that I point that out is because as Gary interviewed all of these different real estate agents out there, he realized that the average millionaire real estate agent at the time when this book was written had about 2,000 people in their database. About 2,000 people in their database. That was about the average across the board. Now, what he found was that there was one individual who had 500 people in her database. She was the anomaly. And so as he studied and he wrote the book, he went back and he said, you know what? I want to know, why is it that this one person is achieving the same level of results and yet their database is smaller? Why is it that they're able to achieve and have such a profitable business, and yet their database is 1/4 the size of everyone else? And if you haven't guessed yet, when he went and asked her that question, she said, well, her database was filled with investors, right? She helped to cultivate this idea of investing in the database that she had. And that's when he went and he wrote this book, The Millionaire Real Estate Investor. So this came after The Millionaire Real Estate Agent. And that's why this book was written, right? Is that one, he found a couple of things. He found that for her database was almost 100% investors, or people that she had cultivated and grown into becoming investors, which, just like The Millionaire Real Estate Agent gives us the models of what it takes to build a millionaire real estate business, this is the book of what it takes to build a millionaire real estate investment business, right? An investment business. And this book can really be a tool for a couple things. It can be a tool, one, so that you grow your own knowledge of the real estate industry, right? And have an understanding of what it really looks like when we're playing in the investment game, which is especially relevant in the market that we're in right now, right? Anytime we're in a shifted market is when investors really come out to play. But two, the book is a lead generation tool, right? A lead generation tool. What if we precondition our clients into a wealth building mindset, right? Kathy Oakes talked about that the other day on our call. She said, what did she say? She said, this is a great book to gift at closing, and to say, hey, thank you so much for allowing me to be part of the process to buy your first home. Now I'd love to help show you how to buy the next one, right? And it becomes a process. And then there's a lot of different educational tools that are associated with it that you can utilize in your business. So definitely, if you have a preference, drop it in the comments as well. And then I'll make sure that I kind of keep it up, but I will go with the majority. And then in July, we will start one of the two, right? We'll start one of the two. Awesome, but that's enough about that. Let's get into the weekly market update. So we're gonna go into stats, and then of course, if you have questions, go ahead and drop them in. I'm gonna share my screen for you really quickly. Let's go ahead and get right in here. Okay, do you guys see, let me go into view mode. Everybody see, thumbs up? Okay, perfect, thanks guys. Okay, perfect. So we're gonna take a look. So if you remember when we talked about this last week, one of the things we had noticed last week was the first week that we not only met pre-COVID showing levels, I'm sorry, not last week, 2 weeks ago, we not only met pre-COVID showing levels, right? We surpassed it. And one of the things that we had talked about was that we probably were gonna experience a little bit of that pent-up demand. Right? There's pent-up demand right now that's being released. So there's agents out there that are definitely saying, you know what? I have so much business right now. I'm at a really good place. In fact, my business is peaked. It's bigger than it was pre-COVID. And then you have agents on the other end of the spectrum that are saying, hey, nobody wants to move forward right now. All right, I'm having trouble finding business. Now, I'm gonna give you one, there's two items there. One is an issue of mindset. Two is an issue of activities, right? Those that were doing the activities consistently during this down period that we've had over the past month or so are the ones that are now cultivating and reaping the rewards of that benefit, because that pent-up demand is being released. So I think we're gonna see showing levels stay a little bit higher, right? Until we get back and that pent-up demand kind of decreases us back to normal rates. So as of last week, right? Last Sunday, we had we were 91.9 above, right? In comparison to 45.4% above, right? In 2019. If we look at this past week, so there's a slight dip, a very slight dip on Sunday. Well, what was Sunday, you guys? I see you guys, I see the lip reading right there.
Father's Day.
Yes, it was Father's Day. Thank you. So we know, we always want to inspect what we're expecting, right? And we know that the dips, if we're looking at it out of context, we're like, hey, why were there less showings on Sunday? Well, a lot of people were spending time at home with their families, right? People do barbecues, they go travel, they all kinds of different things that people do. So it's a very slight dip, but for the most part, we're on that upward trajectory there, right? You can see it right over here. We've stayed on that upward trajectory. It's still, we're within that pent-up demand. But here's the other thing. If you look at 2019, right, the week before and then the week here, there was that slight increase even in 2019. So we're kind of staying on this upward trajectory. We're just higher because we're releasing the pent-up demand from over here, from when people stopped looking, right? And we'll see as we keep monitoring what's going on with the mortgage rates and all of those pieces, we'll keep seeing, you know, whether this continues to go up. Here's the other thing, is that the shortage of inventory is also going to cause more showings, right? Because a buyer may have to look at twice as many homes to get an offer accepted. And we know the shortage of inventory is playing a role right now as well, right? So I want you to keep that in mind as we're looking at these numbers, is that there's a combination here of the pent-up demand from this COVID period where showings were not allowed to now kind of releasing that, but also that you're going to have certain buyers that are out there that, you know, they're ready to go. And yet, because we still have a limited inventory, they're seeing more properties. And so that's contributing to the high showing rates right now, right? That's going to contribute to our high showing rates. Now, getting into the numbers. So we've been looking at in our 8-week window, right? Our 8-week pre-COVID window, which is January 27th to March 22nd. And now the 13-week window from March 23rd to June 21st. So to this past week. Now, a couple things that I want to note on this. And then the other question that I would have for you guys, if there's additional data that you want us to start looking at, because I'm going to look at switching up some of this data over the next couple weeks so that we get some more info about what's going on in the market and what are some other impacts that are going to be coming into play now, especially as you know, the industry continues to change. I know I was reading an article this morning, and one of the things that it talked about is, you know, and this is on DS News, but mortgage delinquencies have hit a record high. They've increased by over 50% in the last 2 months, right? There's been an over 50% increase in the last 2 months. And so while I know that this data, we don't go as much into the mortgage side of it, I think that that's an important statistic to know, right? It's very important to know that. Why? Because we have limited inventory right now. It's going to be a couple reasons. One, again, guys, I'm going to say it again. If you haven't talked to your clients about what's going on in the forbearance market, let that be the sign that you need to take action today, right? Let that be the sign that you need to take action today, because you may be the difference between somebody being able to protect their equity, right? Or potentially having to sell, right? And I would much rather help a client sell and be in a stable position and gain something back, or at least not have to go into foreclosure than having one of my clients lose their home, right? Than having one of my clients lose their home. So that's going to be really important. So that's going to be one of the stats that I want to start talking about as we go through these calls, is we need to be looking at what is going on in the mortgage market, because the mortgage market and those delinquencies are directly going to impact what happens here, right? What happens here, it's going to impact what happens with inventory. I honestly do think that we'll see a little bit more of the impact of that. So I've talked about this before, lead measures versus lag measures, right? Lead measures are going to be so as an example, the amount of time you lead generate is a lead measure. The amount of contacts you make is a lead measure, right? It's an indicator of what might happen from the result. The actual result and the measurement of that result, that's our lag measure, right? We can only see that once it's done. So knowing that there's 50% delinquencies right now is a little bit of that there's been a 50% increase, right, in delinquencies over the last 2 months. That's a lead measure that precludes what will probably happen in 2021, where we see major notice of defaults, right? Where we'll see more individuals needing to sell their home because of financial distress situations, and where we will probably see an increase for those that are not ready for it in foreclosures, right? Where we're probably gonna see that as well. So we wanna make sure that we're looking at that as well. So let's go ahead and get back into the numbers right over here. So again, we're looking at last week, the week of June 15th. Our average price point of homes that hit the market the week of June 15th was of for sale properties was 589, right? Was 589. That brought our 12-week average to 565 in comparison to the 8-week average of 554,600 in that pre-COVID impact period. Still a little higher, right? And that continued this past week. Not a huge increase, about $1,000 of an increase, but the average for sale property in the last week was 590, right? Was 590. So it brought our 13-week average up just a little bit, but not too much. We're still at a little bit of an increase here. Now, let's go ahead and go back over here. Our under contract price point, right? Under contract price point last week, the under contract average price was $629, right? Was $629. And our this past week, and I'm gonna note, guys, I have a slight error on here, so don't screenshot these ones. I'll get them corrected on the downloads, right? I'll get them corrected on the downloads from here for you. In the median for sale, the per week average is incorrect, right? I'm gonna note, because price point has gone up. This should actually be a higher price point. So I'll make sure that that gets corrected on the downloadables before I drop it in for you. But I just wanna note that because I know that this number has actually gone up very slightly. We're still in the 1, almost 2 percentile range, but I just wanna make that clarification. But under contract. So this week, last week, the price point of homes that hit the market were at 629,000, right? 629,000. This last week, that went up. So we've seen this slowly creep up. It went up to 638, right? 638. That's a little bit of a big jump, right? We had seen an increase. We've kind of the last couple weeks, we've gone from 600, okay? There was 620. We had 2 weeks back to back that were 620. We went up to 629, and now we're at 638 as a median under contract price point within that given week. In just looking at these numbers and seeing the trends that we've experienced within the past couple weeks, it is highly likely that we're going to get into the green very, very soon, right? This is a very slight difference here. We're less than 0.07% of a difference on this per week median average, 602,845, in comparison to that 8-week period, 603, 300. So what does that mean, right? What does that mean? Well, I'd say, our inventory total inventory sold has not moved dramatically. I'd say those homes that are in a price point that moves very quickly, right? We're seeing higher offers. We're still seeing multiple offer situations, right? We're still seeing that pent-up demand, right? That pent-up demand. So I think we're gonna get into the green before this starts decreasing, right? Only time will tell, but what I'm looking at in terms of just this under contract, and then looking at, still looking at the new inventory, still looking at how many homes are selling on a week-by-week basis, I would say that we're probably gonna get into the green here before we go back down into the red, right? We're probably gonna get into the green before it starts going down. So if your sellers are asking if right now is a good time to sell, well, if they wanna get top dollar for their property, then right now, where there's still a little bit of that pent-up demand, is going to be a great time. While there's still buyers that are on the market ready to take advantage of the interest rates as they stand right now, it's still going to be a good time, right? Because they're still going to get a good price for the property. I don't know that this is going to be sustainable, right? Now, it might sustain for a while, but once we see that influx of inventory, and in all honesty, I don't foresee that influx of inventory happening for a while when we're looking at that foreclosure market, because that's going to take time, right? That's going to take time. There's a lot of regulation that's in place right now that is really, in the meantime, with the forbearance agreements, that all has to play out before we start seeing the notice of defaults, before we start seeing that financially distressed properties hit the inventory. Hit the market, right? So I think we're going to sustain this. We're going to get into the green at some point right here. So it's probably going to sustain for a little while before we see any type of price correction, before we see that decrease. Now, I'll note, we are due for a price correction, right? We are due for a price correction. We've been due for a price correction. And yet the inventory it's keeping us in kind of this stagnant period right here. So I just want to make that note, is we want to look at where we're at right now, but we also want to start anticipating what's likely to come in the future. So again, looking at total inventory sold, pre-COVID, it was about 897 homes that were selling on a week-by-week basis. 2 weeks ago, 674 homes sold within Los Angeles County. Last week, that increase, despite it being there being a holiday during last week, right? Last week increased to 788 homes sold in Los Angeles County in the last week. It increased our per week average to 563. We're still low. So when we started this pre-COVID, we were down about 43%. We haven't trickled that much of a change, right? When we first started this 13 weeks ago, we were at about a 43% decrease. So that's not a super significant move. It means slowly but surely homes that are being sold on a week by week basis, it is going up, but it's not going up dramatically, right? It's not matching pre-COVID just yet. We'll probably get there. I'm hoping that we'll get there over the next couple of weeks, but I anticipate it. It's just a slow climb right now, right? And part of it is what happens, buyers during a market like this, they want to make sure they're getting the best deal. So they'll get competitive on, the nicer homes that are on the market. They're going to get competitive on those turnkey properties. You'll have some people right now in this market that, although they're out there looking, they're a little bit more hesitant because they're seeing what's going on in the market. And what happens, they're like, oh, I want to get the best deal possible. And so all of a sudden you have a lot of buyers that are willing to hold out a little bit, right? They want to wait a little bit. They want to hold out a little bit. And so the inventory that's being sold, although it's going up, that's not moving up dramatically. You also have certain pockets of the market that are going to sit a little longer, right? So luxury tends to sit in a market like this. Why? Because we don't have everybody who had supplemental income to go buy their second home, their vacation home, their whatever that might be. They're thinking, oh, you know what? Maybe we'll hold off and we'll wait a little bit. So your luxury is going to see more dramatic price decreases in a market like this, depending. And that's not everywhere, right? That's not everywhere, because you still want to make sure that you have it well priced, right? You want to make sure that you have it very well priced. But if you're sitting a little bit above the market where that maybe would have worked last year, that's not really going to work this year. You're going to see more dramatic price decreases. And then new inventory. So this is great news right here, right? If we look at these numbers. So pre-COVID, right? Pre-COVID, we were seeing about 1,300, almost 320 homes hit the market on a week by week basis, right? Last 2 weeks ago, we had 1,152 homes hit the market. Last week, we had 1,123 homes hit the market. The nice thing is that for the past month, we've been pretty steady in the homes hitting the market on a week by week basis. The number has been above 1,000, right? We've been above 1,000 consistently. So we're saying now our per week average in this 13-week period is within the 1,000 marker, right? Which is good. We want to stay here. We want this inventory hitting the market because we're still in a place where we still have that limited inventory. So this tells us a couple things. People are wanting to sell, and those that wanted to sell, they're more comfortable again, right? If they were hesitant before, they're getting more comfortable. So if you had sellers that were in your pipeline, right now is a great time to reach out to them because price is on your side, right? Price is on your side. And right now is when the fear has passed a little bit, and those individuals that were wanting to sell, they're getting ready to get back on the market. But there's probably something else going on here with the inventory. Is again, we're gonna see some people that are taking advantage of realizing that, hey, maybe I need to sell and downsize instead of getting myself into more debt. Maybe I need to sell and rent for a little while so that I'm not getting into a forbearance situation, right? So that I'm not getting into a foreclosure situation. Maybe I should take advantage of that right now, right? Especially if they are employed and they can take advantage of those low interest rates. Now they can, take this particular, whatever properties they have and move that over. The other piece of this, maybe they have secondary properties, right? Or portfolio properties that are starting to, that they're starting to liquidate, right? That they may be starting to liquidate. So you'll have investors right now or absentee owners that are saying, hey, you know what? Everything that's going on with this market, I want to cash out, right? I want to cash out. I want to have that safety net. And we know properties can become safety nets. I know a lot of investors right now that have portfolios of properties, and they're doing two things. They're refinancing all of the properties so that they can get the interest rates lowered on anything that has a mortgage still attached to it. Some of them are even taking properties that they have completely paid off, refinancing them so that they can get the mortgage rates, so that they can buy down the rates and get the mortgage rates lowered on other properties, right? But you'll also have some people that are saying, hey, instead of refinancing, we're going to sell one of the portfolio, right? We're going to decrease the portfolio size so that we can pay off another, or so that we can get payments on the other properties decrease, or whatever it is they might need. So that's what we're also going to see, some of this inventory that's hitting, right? And that's going to be one of the things that we are talking about on Thursday for our webinar. So Thursday at I believe at 10 or 10:30, we're going to be doing our webinar on absentee owners specifically, right? On absentee owners specifically. So we'll be sending that out for you guys as well. But I would say, right, we're going to be looking at this market and what is the conversation that you should be having around that. So just a couple insights for the week. I know that was a lot of information this time around, but there's certain things that we want to start keeping an eye on as it pertains to what is going on in the market. So I'm hoping that's helpful. I'm going to make the correction on the slide, and then I'll go ahead and make sure that it's posted up for you guys today so that you can download and utilize that for your clients as well. One last reminder, don't forget, vote in the comments, guys, what book you want us to focus on. Right now, I have 2 votes for the Millionaire Real Estate Investor, right? And I see some of you guys haven't submitted yet. Some of you might still be thinking about it. No worries. You let me know which text you want to focus on, right, for July. And we're going to really just dig into that. And then a couple reminders, there's going to be a lot of pieces on the calendar today, right? Contracts class is going to be going on at 10. So you want to make sure that you are jumping on that. I see another vote. Oh, I see more votes come in. I see 1 vote on MREA. And so far, the Millionaire Real Estate Investor seems to be winning, you guys. So I'll keep an eye right now. I'll keep tally on it. And I'll be asking you guys this I'll make sure that I post it out so you can vote as well in the group. And that way we get kind of the majority consensus on it as well. So don't forget, we've got contract scores. Title today, right, is going to be talking about understanding a living trust and the new tax law, right? And the new tax law. That's going to be today at 1 p.m. and then 6 p.m. So if you've ever been an avid door knocker, if you've ever been an avid farmer, guess what? We can't go out and door knock anymore. We can't go out into our farms anymore. What can we do? We can use tools like a tool called Nextdoor, right? So it's time to really look at building our database with digital farming and digital door knocking and tools like Nextdoor. That class is going to be tonight at 6 p.m. with Miss Diana. So make sure that you guys loop in on the classes there, right? Make sure you're looping in on the classes there. And a couple quotes as we end the day on determination. What counts is not necessarily the size of the dog in the fight. It's the size of the fight in the dog. Roy H. Williams says, unrelenting action is what turns starry-eyed daydreams into silly-eyed objections. And this one I really love. Peter Gabriel says, you can blow out a candle, but you cannot blow out a fire. Right? So I hope that you continue to take action and get your business momentum, get it going, light it on fire, and take action today. And may you have an absolutely phenomenal rest of your Tuesday. Bye, everyone.
Thank you.